All right, guys, welcome back to the channel. And if you're new here, thanks for stopping by. Make sure you subscribe to the channel as I'm talking about specific signals in today's video that we've been now covering for years. And each of the time that these signals have shown up, it's essentially a surefire, almost, way to a new all-time high, or at least some significant profits to the upside. And as the title might suggest, we're looking at something like this opportunity won't present itself again. And although it's presented itself before in this cycle and at this stage of the cycle, in terms of how much time may be left, it seems like this could be one of the final ones, if not the final time that we see this signal play out for the bulls in this cycle. The next time it happens, it may in fact be for the bears, and that could lead to a prolonged bear market. But enough about the bearishness and the downside. Today's video is all about the upside left in this bull market. Now, the signal that we're looking at, well, we have two of them in particular. One is based on swings, the other is based on price and time. And I'm going to dive into these with what they look like, how they've shown up with this 26% gain from a low, nearly $20,000 from that low. We're now closer to the previous old all-time high than we are to the low. Explain that, and then also explain what the entry opportunities may look like if you've missed out on this $20,000 move, 26% up from the low. It's no point getting FOMO at this stage, as we'll look at with the market sentiment as well. So stay tuned, hit the like button, subscribe to the channel. And if you want more on your trading and investing with how to navigate the end of this cycle, whether it's for Bitcoin, the stock markets, or for the real estate cycle, check out TIA Premium. The link will be pinned at the top of the video description. Okay, big day as we've hit the 50% and closed above the 50%. So if you are new to this style of analysis, we're looking at Gann analysis, and that 50% level is the key here. One day so far has closed above the 50%. We've taken out the top of March to the 6th of March, which is also an important top. It was a lower high after that tweet from Trump that basically just pumped the market for a day, and then everyone sold it off, or the market sold it off from that point. So we're right in between those two levels now. This 50% at $92,000 and the top of the bar from the 2nd of March. That top is 95,000. So right there, we've hit roughly about $94,000 at this peak. So this has presented two major things. One is the overbalance in time and price. This opportunity that I'm discussing in today's video, which has shown up several times before, and I've talked about them in real time on the channel. You can check out videos from October 2024, so over 6 months ago. I won't go through those in today's video, but you can also see it on X as well. If you're not following, definitely do that, as you can get a quick update in terms of the signals and just in a written format. Now, we've seen these signals before, and they have a very high probability of playing out, essentially turning the trend. This time we've got $19,500 move to the upside and 15 days from the low. So that's basically where Bitcoin has got to right now. And we take a look at any of the other previous moves on this downtrend. This is the downtrend from Trump's inauguration to the low that happened on the 7th of April. That was all around the tariffs. 77 days down, $35,000 down. This move to the upside was $17,000 right there, 17,000. And in terms of time, we were looking at any sort of rally that we need it to be longer than any of the previous moves to the upside. And you can see this rally here, low to the high was 13 days. So we now have 15 days to the upside. So essentially the bulls have been controlling this market for longer than any previous time in this correction, meaning the rally has gone up for longer. So we've got an extension on time. That's what you want to see for the start, or at least a very strong signal of a change in trend. Now, you might recall that I've used this on the USDT dominance as well, and this is shown up here, essentially in the flip side. So for the bears, you've got now a breakdown of the USDT dominance. Of course, in crypto, your money is held in USDT, or that's where the profits are generally held for a period of time. Could be longer, could be shorter. Essentially, if people are scared, they want to get out of risk assets, then they jump into USDT. USDT or USDC, so you could use either or, but essentially I'm using USDT here because it's the largest market cap of stablecoin in the crypto space. So USDT has shown this signal as well to the downside. So the bears are in control here, meaning that money is flowing out of USDT. Now it still needs 2 more signals to be hit. We'll cover those on the channel as the days progress as well, in terms of whether they're going to get hit or when they do get hit as well. Right now, we're looking for a 50% breakdown. That is at 5%, and then also 4.75%. So that's the major one here. If these levels get broken down, then it's just a much easier path back down to the next levels. That's pretty much how the game plays here. And then if the big one is broken, 3.7%, that is going to be absolutely phenomenal for the bulls in Bitcoin and crypto, right? But the big but is that it did not happen in 2021. It did not happen in 2020 when we had that big boom up. It did not happen in 2017, basically where we've started this diagonal trend line. So when the USDT dominance gets back to these levels, possibly somewhere at these lows, possibly even back to the diagonal here, that is going to be a very important level to be watching for the rest of this bull market. So we are talking about the bull. We've looked at overbalance in time and price. This has been working to the upside. Now, we've seen this before, going back to 2024, as I said, in September and October. This bar right here gave us the overbalance in time and price. There was longer in time to the upside and a larger price move. So that was the second thing that I was looking at here. We had a $19,500 move to the upside, whereas the largest price move to the upside in this downtrend, so the biggest rally, was only 17,000. So now we've now exceeded the price to the upside and the time to the upside. So there is a very strong sentiment shift from the bears to the bulls. Bears can turn into bulls as well, and that's what gets the move going again. There are, of course, many, many warnings out there when it comes to these moves and how they might play out to the end. A couple of those that have come up. You've got the narratives of the death cross as well. You've got death cross rallies when you're looking at your moving averages. So basically, your moving averages have crossed, and we get a bit of a rally up here. Now, I'm of the similar view that this is part of that rally. And like I said in the intro, you want to know what to do from this point. Generally, there is a correction from here. Where does that correction go? Well, that's the possibly $1 million question for you. But either way, in terms of an entry, it doesn't matter if the market breaks down and it corrects, maybe from here at 94, maybe from 95, maybe it comes up, meets the $100,000 level. But that correction is the next important part of the game, and we'll likely see the fear and greed roll over yet again. This has been a big one that we've been following all the way through the entire 2 cycles now that we've been on YouTube, going from 2021 into 2025 now. And every single time there is a correction in the market sentiment. So I'm looking at the overbalance in time and price to the upside. Then what can we do next? Well, we're looking for resistance levels to the upside, and then if the market hits those, gets rejected, then we look to the downside for those moves. And so this is the big key thing here, because we've seen the overbalance in time and price, on any of these corrections, maybe it goes to 100, comes back, maybe it goes to 95, comes back, we're just looking for these corrections. It swings the probabilities in favor that that correction is going to be a higher low. It doesn't mean that it has to be, but it puts the probabilities in favor that this next low that comes up, maybe that low is at 80, maybe that low is at 88 or 89, back to the 50% level. We don't know yet, but whatever that low is, that is a good place to be getting in. And the reason for that is that we've got a swing in the bias towards the bulls away from the bears based on this particular signal here, the overbalance in time and price. So that's a very, very strong one here in terms of this opportunity that presents itself. Now, just as a look back in history, the opportunity presented itself again in October 2024. So that was this higher low here. The sentiment at the time, very, very low. Have a look on the chart. You can see how this dropped. It went from greed, which is where we currently are, down to fear, little bounce into neutral, back down into fear, and then things got going again and held out in greed. So that was through this area, bounced out, held out again. You had a couple of other opportunities. You just had to pay the premium, slightly higher prices, but the strength had been built into the market. Meanwhile, there were still people expecting that this price was going to go down and break past 70. You know, you still see a lot of comments from whoever saying that Bitcoin is about to put in a lower high and we're going to see a correction down past $60,000. Of course, anything is possible. It's just that the probabilities are a lot less now because of this particular move. And we've seen it back here in 2024. And we also saw it back in 2022, 2023 at these lows when we got a nice solid rally out, a correction. The rally out was bigger than anything that we had seen in this prior section. And then it continued on from that point, breaking out of those swing tops on a weekly basis and a monthly basis, which brings me to the next point, is the weekly swing chart. So here is the daily. We've got our Swing Pro. If you want to add this into your trading plans, because it helps you identify the entries and exit points for basically any market that you're tracking or that you're trading or investing in longer term. And in this case, I'm going to look at it on the weekly. That you can find in the video description as well. Now, the swing tops, the weekly swing tops have broken. They broke yesterday on this bar here, just marginally on some charts, but well, that was 2 days ago. But yesterday was the confirming break of the swing. Let me get my words out. And that's at top there at $89,000, $89,200. And essentially breaking through that has now turned this into a black background. If it was down, if the trend was down, you'd see it red, and that depends on whichever time frame we're looking at. And if it was up, if the trend was up like it was through this period here, well, then you would see this green. But in this case, it's gone to an uncertain, but we've got a breakout of the top, which means it's turned the swing back up. And should the market put in a higher low here over the coming weeks and then start to move higher, well, that would put in higher highs and higher lows, turning this one here green. And it just gives you that extra confirmation that the trend is now up so that you don't have to try and identify through different time frames. People get really, really confused. They start looking at 1 hour time frames and 4 hour time frames, hoping that they're seeing a macro change in trend, which is completely not the case. You're looking at low time frames, you're going to get low changes. You're looking at higher time frames, you're going to get bigger changes. And for now, we've got this breakout here. So the weekly swing breakout happened last time as well. And this is the tricky part because we're underneath the previous all-time high and we're in a trading range. Like you can see through this trading range of 2024, there were several times that the swing broke to the upside and back down, broke out to the upside, back down, and then eventually you got the clear trend on. So there is going to be a little bit of a challenge here when it comes to the swings because the market is within a trading range. Once it breaks out of a trading range, the swing goes nuts. And so you want to find a way to get onto that swing as early as possible, which is why I've looked at the overbalance in time and price amongst many other signals, which of course, if you want to add that in, TIA Premium, link is in the top of the video description. Check that out so you can put that into your plan and navigate the ends of the cycle. So the swing is up, talking about the end of the cycle, maybe one of these last opportunities, looking at the time frames now. And it's, it's known by almost everyone that this 4-year cycle thing, you might see it 3 years up, 1 year down, 3 years up, 1 year down. So I think that is eventually going to shift slightly. Maybe this time round, we don't see the 3 full years up and it's slightly shorter. Maybe it comes in June, maybe it comes July, August. No one knows for sure, which is why I like to be prepared and understand that there is no guarantees to these markets. In the case of a, say, shorter than 3-year move, you would start to see the market potentially move up quicker than what we have done in the previous moves. And that's where this white line comes in here. So this was the previous move from 49,000 to 109,000. What's that, about a $60,000 move? And that 60,000 bucks was almost exactly the same as the previous move to the top before we got a significant correction, 58,000. So the market, Bitcoin, did it twice, 60K, 58K, give or take $1,000 here, corrected, then did another 60K, almost exactly the same. If we were to see another $60,000 from this low, that would take BTC up to somewhere around 132 to about 134. So it's done it twice. Maybe it can extend further than that. In terms of a percentage, right up to these 130s, it's about an 80% move from the low. So there's really, I guess, not that much left in it from this point, if that is the case. It could go a lot further. Maybe you're in the camp that it is. That's fine. I'm just looking at what the market has already done. And in terms of twice now at 60s, well, if it does 60, great. If it does half that, which we often look at, the 50% levels, well, the $30,000 mark is only at around 104,000, which if you also use your extensions, low to high, that's your 50% here. So that's going to be a very, very critical level moving forward now for BTC, around the $104,000 level. So keep that on the back of your minds, maybe put it on your charts and have a look at how does Bitcoin react at 104. Okay, so in terms of the speed now to the upside, this move of the last 2.5, 3 weeks is actually faster than the previous move. And that previous move was pretty quick, right? From August up to January, there was a very, very quick move in the middle there, basically November into December, the election, etc. That was the big move, but the move was building 2 to 3 months prior, from August into November. And so now we're starting to move relatively quickly. If this thing shoots up and is quicker than what it did last time, then you could probably anticipate that it could either stall out, trying to build for another leg up. Ideally, that would be the case for the bulls, something like 2017, where it just kept building, big moves, it built, big moves, it built, and then you get this huge, huge blow off top. Like, this would be absolutely ideal. Hopefully that's the case and it catches everyone by surprise and, everyone makes a ton of money. But if not, and we start to see this thing break down, you want to be looking for some sort of angle which is going to adjust over time. But we've got this one for now. You just want to see if this market heads up, and if it breaks underneath that angle and starts to test it from the underside, that is a very firm and almost confirmed way that the market is slowing down. And that's what you don't want to see. So we want to see at least a slowdown over the coming weeks, just to catch up with the line, maybe start to map out its own path up to a new high, or even huge numbers, right? But if it starts to go too quick and then slow down, comes back underneath, that is a very big, big, big red flag. We're not there yet. We're talking about the bulls, we're talking about the upside and the early stuff here, but I think it's important to prepare for that later on, because if this is the last chance, like I've got something to do in the titles because of the timing of the game, well, then you don't want to be caught with your tail, I don't know what the saying is, tail between your legs through that period, or basically with your pants down, thinking that Michael Saylor is going to come to the rescue and keep buying up Bitcoin into higher and higher prices. Eventually, time runs out, and it happens throughout history. Things never keep going on forever. So in terms of the timing now, 126 weeks. That means, in terms of a 3-year cycle here, previous cycles were around 150, 155 weeks. That could mean 20, 30 weeks left. If there is 20 to 30 weeks left, well, let's have a look where that takes us. 20 weeks, about September, 30 weeks, roughly around November. So we could be looking at somewhere between Q3, Q4 of 2025 as the next time frame to be watching the market, to see what happens next. It doesn't mean that it has to be over then, but if you start to see these signs, 1, of the market slowing down, 2, you start to see swings break down, 3, you start to see price come back underneath all-time highs, 4, you start to see an overbalance in time and price to the downside, meaning any of the corrections become larger and larger, giving you that overbalance in time and price. You're starting to get quite a few signals there. And if the market sentiment also slows down, like we've looked at previously, you can see here through those peaks, that would be another clear indicator that it's probably likely bouncing around some sort of high, and it's giving us a few opportunities to at least take some profits. Maybe if you're risk averse, dump your entire portfolio. That's entirely up to you. It's your money. You've got your own keys into your exchanges, so you get to do what you want to do, click the buttons as you will. But the market, it generally gives you a few signals. Sometimes it continues on and you go, shit, why did I do that? Other times you go, I thank all of the stars and the moons that I took those opportunities when a few of these signs started to show up. Lowering volume, lowering interest, lowering market sentiment, you know, people just not as excited about this move anymore. And then all those price and time signals that we've talked about in the past start to play out. So I had to, you know, explain the whole, this could be that last time, this best opportunity in the cycle, explain why we've got this great opportunity and how it's shown itself previously in this cycle, in previous cycles, and it's also done it in other markets like the stock market. It does it everywhere. This is a very common signal that we use to identify changes in trend, whether they're longer term or shorter term. That's going to depend on the time frame that we're watching here. So the way I see it is that I am bullish, but I'm now cautiously bullish because we are coming towards the end of many cycles. Bitcoin might top earlier. The stock market probably has a little bit more time here. We have the real estate cycle as well. We're coming into this peak here somewhere around 2025, 2026 to be watching out for. And that's where things start to slow down with the economy. And then that also plays out into the stock markets, and the majority of the market then becomes risk adverse. What we're looking for here is a land-led recession. So basically when land prices really start to come down, not just pause, take a couple of months off like they have been doing throughout the US in a national home price index, you know, an overall average. But broadly speaking, when you start to see multi-months of those coming down, that has not occurred yet. So we're still in the driver's seat to the upside. The stock market, a brief look here, it's holding up for now and really needs to get back above 5,500 points. That's a key level. That's going to be a nice turnaround for the bulls at least. And that goes across the board for the rest of the stock markets. Now, I'll cover this in future videos, so stay tuned to the channel, like and subscribe. Links in the video description for TIA Premium. Help yourself navigate this end part of the cycle. I'll see you guys back here at the next video with plenty more information, especially on the USDT dominance as this has been coming down. I've also got the VIX to go through as well, gold prices as well, which have hit new all-time highs but rejected, and of course more on the exchange volume and market sentiment. Heaps that I didn't have time to get through with you today, but of course more videos coming up. Stay tuned and I'll see you at the next one. Peace out.